Good morning, everybody. It's Christopher from Serene Education with the Forex and notes update for the 21st of February 2013. Hi, everybody. Hope you had a fantastic trading day, and it was a fantastic trading day yesterday. Anybody who didn't make anything yesterday needs a good hiding. We saw a lot of movement yesterday, and it set us up nicely for things to progress. So, what we're looking at is the four majors this morning, starting with the euro against US dollar. Let's have a look and see what's been happening on the daily. Huge bearish engulfing candle yesterday after price actually found a bit of support near term here at 13,300. We wanted to see price getting below that, and indeed it did exactly that. We saw a lot of hesitation or consolidation, a lot of indecision candles, followed by a bullish engulfing candle 2 days ago. However, not really moving any higher, very, very indecisive, and you can see that the intermediate trend very much now in favor of downside. That bearish engulfing candle really pushing price down, and doing so breaking below the 13,300 mark. So we'll be below 13,300, below the 50-period moving average, and now we should be targeting at least the 13,200. These areas over here are my fib retracement areas from the current low that we saw in November last year to the current high that we've had this year in late January. So next port of call would be the 13,200. Second port of call would be roughly around the 305, working our way back towards that psychological round number in the shape of 13,300. And then all the way back towards those levels here at potentially the institution moving average, which happens to stand at, if I'm not mistaken, probably the 78.6 fib retracement at 12,900. So be aware of that. Look for that intraday. Put on those plots, you can see 13,300, the major price support and resistance level being broken. My next target would be 13,200 and so forth. All the way down here to 13,05 would be the next one. But you can see quite clearly on my 4 hour now, you can see the institution moving average primarily above, very much above price as it stands. Beforehand it was below, so it's acting as a nice support. However, you can see near term more red than blue, and sure enough we are trading to the downside. Swing lows depicts downside movements, so we should be looking for further shorting opportunities. As long as price stays below 13,300 intraday, we should be looking to take that momentum and carry it forth towards the 13,200 mark. Get below that, we should be heading towards that all-important round number at 1305 before 1300 becomes part of it. On to sterling against the US dollar. Let's have a look at this particular pair. A lot of movement, guys. If you look at the weekly, let's bring up the weekly, you can see how much movement we've seen. Pretty much failing at the 16,500 mark. Clearly resistance level here, and price falling lower. What I've done is I've taken the all-time high here back in 2007 on my monthly chart down to the low we saw in 2009. And you can see the fib retracements pretty much been consolidating between 2 points since 2010 right through to 2013. Pretty much moving backwards and forwards between 16,500 and the 5,300 mark. That's quite clear to see. If we go to the daily chart, you can quite clearly see primarily 15,300 major support, and that 16,500 price has not really managed to move higher once we've reached it. So at the moment now clearly breaking through this 15,300, which is not a really good sign for this particular pair. If that genuinely is the case, then price is definitely going to start falling. It can only go as far as the 0 line. So if you look at where we are now, you can see that quite clearly the next level of support would be here roughly around the 13,500 mark. There's one slight one before then, roughly around the 14,500, but there's still a lot of air between where price is trading now and that particular area. You can quite clearly see through 2011, 2012, we can see price finding a lot of support, even through 2010, a lot of support for this particular pair. Now on the weekly chart, you can see prices really managed to break through that psychological round number. It's got to stay below that now. As long as it can stay below that area, then ultimately looking forward to the future, then we should be tackling that 14,500 below us. Get below 14,500, then that all-important 13,500. On to US dollar Swiss franc. Let's have a look at this particular pair. Weekly, price pulling back, moving higher, consolidation 2 weeks ago, and price moving up towards this consolidation area here. There's a bit of consolidation between these two bandwidths, but ultimately back up towards that 9,400 would be our ultimate target. On the daily, you can quite clearly see that move. Nice progression to the upside. The CTC template really giving us an indication we should be moving higher. The consolidation at the moment now, we've got a consolidation high. That price is testing. Yesterday traded into this area, but you can see this morning on the Asian session going into the European session open, price is really mustering through that. So as the closer we get to this 9400 mark in the institution, price is going to slow down. So any trades that you're taking now should be ones with aggressive stops to allow for that potential movement if it goes against us. So you can quickly see on the 4 hour, swing highs depicting upside move, swing high, swing high, swing high, swing high, above the institution moving average, all the moving average below price, which is a good sign. CTC on our side, the ribbon very much blue in our favor. Like to get above this 78.2 fib retracement area here at the 90 what's that, 93.50 mark, if possible. Sorry, 93. 931, apologies. Get above that, and then we can see a bit more cleaner air between now and the 940. At the moment now, fib retracement from the current high intraday to the current low. You can see the fib retracement price really moving between these points quite nicely. And I use them as yardsticks or measure sticks, target areas on my fibs. So well aware if I've got to get above 78, then there's more likelihood of price moving higher because it is a consolidation band. We are trading into it as we speak. So rather get above that, give me a nice juicy bullish candle, and then I can just scalp quite quickly, quite aggressively to that 9400 mark to the upside. Last pair of the day is US dollar Japanese yen. This particular one making huge grounds. I've got a monthly chart open here. You can see the all-time low, the high back in 2007 before the market really fell out. And you can see a clear drop to the downside. The US dollar lost a lot of ground against the yen. And then in 2011, towards the end of it, we saw price plateauing out through 2012, a bit of momentum growing. And sure enough, we saw that momentum just before the close of 2013. Price really moving higher, attempting these 23, the 38 near-term, the fib retracements on this particular chart, and you can see I've plotted those on my daily. So I have the 87, which is the 23, the 38.2, which is the 9400 right here. The 50% would be at the 1, and vice versa. But you can see quite clearly going into this major support and resistance level here at 94, price is really consolidated, and it's finding it very difficult to actually muster the strength to get above that 94. If we do find price falling away with a nice bearish engulfing candle, then it's safe to say the price is really going to fall or drop. And if you can get below this consolidation area here, then we should be looking for price to fall even further. If you just look at the daily, take the all-time low in September of last year to the current high, you can see that if price fails at that given area and falls over, we should be targeting the 90.50 near term as our first target, back towards this 88, which will take us back towards the 87. There's a consolidation area here, because it's our major long-term consolidation 23.6 fib retracement area. So you're going to get a lot of consolidation as we head into this major area here on our shorter time frames. But we need to get through all this noise at the top here. You can see at 93, a lot of hesitation, prior resistance, price support, 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 support. So get below 93, a nice bearish engulfing candle would likely indicate that we should see this is now resistance, and then price will start to drop towards that 50 period moving average at 90.50 to start with, then down towards this 8700 mark long term. So intraday, what we want to be looking for is putting these support and resistance lines in. Okay, very, very important. 93 I did mention is particularly one where we want to see price really moving below. You can either do that one, or you can take the 9200. A lot of hesitation in between that. Personally, I'll take the 92, get rid of all this bandwidth over here. Near term, if you want to be aggressive, you can by looking for a close below the intraday low here that we've seen recently, just above 93. So get a nice bearish engulfing candle break below 93 would indicate we should be looking further to the downside. Swing lows depicts resistance, and trend direction would be lower, and then we could target that all-important 9200 mark, which will take us back to our 4-hour the institution moving average here. So that'll be a nice little target that intraday. So for the future, just put in a target, a trigger alert at 93, close below that, and then we should be looking further to the downside for the near-term future. That's it, guys. I hope you have a fantastic trading day. Please look at the market news today to see if there's anything that's really going to factor out. There's a lot of news out there, guys. There's a lot of news today. We have German flash. We have a lot of flash PMI results for Europe. We have the Spanish 10-year bond auction. We've also got unemployment claims for this afternoon for the US market. Oh, a lot of news for this afternoon for the US market. Existing home sales. We have a look at those figures that we saw yesterday relating to home starts, etc. Like that. You can factor it all in. We have crude oil inventories. Very important one for the US market. See how much oil the companies out there are holding. The more oil they're holding, the more likely there's production. If the less oil they're holding, there's less production, so there'll be contraction, etc. That all plays into play. So be aware of it, guys. Place or factor it into your trades. Look at the time frame. These news announcements come out, and just be aware of it at those specific times. Other than that, have a fantastic trading day. Please follow the rules of the template and back it up money management, and then just enjoy it. Simple, effective. Have a great day. I'll see you tomorrow morning. Until then, trade serene.